Good morning, it's Aquiles. Here's the Larrea Wealth commentary for the day. It is the 23rd of December. Amazing here in New York as we're getting rain, sleet, you name it. But we're not going to have a big amount of snow, if any. So, anyway, welcome. It's about 6:51 or so here in New York City, and let's get to it. So, I had some thoughts on what's going forward for 2026. I'm going to talk about it today on the Schwab Network at 11:30 a.m. this morning. And one of the big thoughts that came to mind was GDP growth. Looking at probably next year at about 2.5% GDP growth. We're still seeing the American economy somewhat strong, although the rise in unemployment is still causing some concern, a bit of pause there. But inflation is, I don't want to say well within targets, but the Fed is doing exactly what it needs to do in terms of controlling inflation. And as far as they're injecting liquidity by buying T-bills and creating an environment, I spoke to a couple of bankers, and one of the things that was that recurring theme was that the credit that's being used by companies, it is starting to loosen up more than it was before. So we're starting to see that ease a bit. Are we going to, another question that I was asked, are we going to see the Fed continue to cut rates in 2026? Powell's already indicated that that's not the big thing that they're going to do. They'd rather inject liquidity into the system, as I mentioned before. And, I think if the unemployment rate goes up, as one of their mandates, they're going to have to do something. So there might be one more interest rate cut, but all bets are off if you have a new Fed governor. And it's not as simple as just one person. You have to have a bunch of people agreeing on the same thing when it comes to the board of governors. And right now there's a lot of dissent, and it can go either way. So that's another thing to keep into consideration right now. Interesting, commercial real estate. Commercial real estate has been taking it on the chin for quite some time, but there's always areas to make money. And I thought of something, and I think the Journal mentioned it. If you're looking at, let's just say, you want to get into the data storage and go into that big time, there's millions to be made there. And a lot of people are doing that, but you have to also keep in mind that that's just one singular phase, and you really, if you're a commercial owner, you have to be looking at several others. You got to diversify that risk. You got to diversify where your gross income is coming in from. And a lot of, what are you going to do if you have an office building? What are you going to do if you have other things that are just not lent to that infrastructure? So that's going to require a capital expense. Anyway, CapEx aside, we're also looking at going forward in the year. We're hoping that there's going to be more of a sector rotation. That's just a fancy way of saying that, we're in the AI kind of thing right now, and now we want to see it go more towards, I'd love to see more infrastructure plays. I'd love to see more aerospace. I'd love to see more cyclical nature type companies benefiting from the markets as a whole. We haven't seen a whole lot of that. The Magnificent Seven has been taking off, and you know what? It's going to continue to make money. We think that AI is going to continue receiving big budgets from the corporations, but the hope is that we'll start, hey guys, share the love. Let's see more of what happened there go into other sectors, and that happens in boost in productivity, boost in profitability, and at the end of the day, we hope that these companies start increasing. We've talked about wage stagflation, where people's wages are not going up anything significant. We're hoping that next year we'll start seeing above 4% in terms of wage growth versus the stagnation that we've seen over the past decade. So that, I in my personal belief, I think companies have no choice. Even with the AI replacing simple workers, you say to yourself, if you're a company, I need to keep the good quality people that I have, because AI is not going to replace all that. So to continue that profitability, to continue increasing productivity, companies are going to have to loosen up and pay their workers a little bit more. And that's just, something. Another area that I think, we talked about AI, companies are really not going to see any profitability at this point from it. The hope is that within the next 2-3 years, we're going to start seeing accretive to the bottom line and start to make money over the long period of time. Once again, this was never an overnight thing with companies. They knew that this is an investment, and like any investment, it has to gestate, it has to make money, it has to grow. And then at the end of the day, you say to yourself, you take stock, you take inventory, and you see, okay, well, where do we go from here? So that's my report today. Who's the right client for Larrea Wealth? If you're retiring and or you're within 3 months of retiring, you have some micro and macro decisions that you need to make. And our conversations with our potential clients lately has been very concerned about, am I going to outlive my money? Am I going to minimize the taxes? We're talking to clients about Roth conversions. We're talking to clients about, are the estates properly titled? Is the mitigation of tax being coordinated with their CPA? And a lot of times it's not. Second person we help really well is someone who's in transition. This is a time where a lot of danger comes into play, because you might say, hey, I got a little money and let me go replace the roof with your 401k money. What are you, insane? So, you need to talk to an advisor to kind of manage your expectations a little bit and to kind of, filter out that distraction. Because just because you have it doesn't mean you should spend it. You literally wipe out hundreds of thousands of dollars of growth over a 30-40 year period. That being said, why do you keep this money in a 401k with the current company? I've never understood that logic. Working with a good financial advisor, we can make some good decisions for you and continue that growth. Because if you're 50 and over, you're thinking, I got to go into bonds, I got to do. Wait, all right? Talk to someone first before you make that silly decision, all right? So that's the second part. Third part is a lot of these 401ks are underperformers. Oh, but it's cheaper. Cheaper doesn't mean better. There's an old saying, nothing good is free. Got to watch out for that. Lastly, you are sick and tired of trying to do this all on your own. You have better things to do with your time. So I would say to you, reach out to us, hit the button. Hit the button that way, or hit the button that way, depending where it is. Get on the calendar if you qualify. Ask yourself, I've been going all alone this time. I've had nobody in my corner. Achilles, what does it take to become a client of Larrea Wealth? We're not for everybody, but the people that we serve, we like to think we do a good job for them. Have a wonderful day. Enjoy your holiday. I'm not sure I'll be doing a broadcast tomorrow, but I hope that you have a wonderful holiday, and we'll see each other next week. Take care.